So Netflix loses a $170 billion media empire to Paramount Skydance. And their response is to buy Ben Affleck's AI startup.
That is not the power move they think it is.
It's actually kind of genius. They're pivoting to...
Nate, they lost Warner Bros. Discovery. You don't spin that.
Fair. Okay, that's a rough week.
Meanwhile, $6 billion in synergies is just layoffs waiting for a press release.
We'll get into all of it. The rundown.
Okay, $58 billion. Devon and Coterra. That's not a merger. That's a geological event.
It's the biggest U.S. energy deal since the Exxon Pioneer combo, and I think people are sleeping on it. You've got two Permian Basin heavyweights deciding that scale is the only play left.
Agreed. When the cost of capital is this high, you stop drilling for oil and start drilling for synergies.
That's going in the highlight reel.
Moving on, BlackRock's global infrastructure partners and EQT are teaming up to buy AES Corporation. $33.4 billion including debt, 2 infrastructure giants, 1 utility target.
That deal makes complete sense and also somehow feels like it should be illegal.
It's not illegal, it's just cozy.
Very cozy.
Boston Scientific drops $14.5 billion on Penumbra, neurovascular care. This is the one I actually want to talk about later because the multiple they paid is...
wild.
Eyebrow raising, I was going to say.
Same thing.
Now here's the one that got me. Abu Dhabi's 2.0 group just bought a 60.8% stake in an Italian luxury packaging company called ISEM, AED $704 million.
Sovereign wealth going after luxury packaging? That's either genius or someone's nephew had a PowerPoint.
Harsh.
I said what I said.
And finally, the Daily Telegraph sold to a German buyer for £575 million. Beat out the Daily Mail.
The Daily Mail lost a bidding war for a conservative British newspaper. Let that sentence exist for a moment.
British media people are genuinely devastated. Or thrilled. Depends entirely on who you ask.
Meanwhile, Megadeal value has more than doubled year over year, even though overall volume is down 22%. Boardrooms aren't doing more deals. They're doing bigger ones.
Swinging for the fences.
Which brings us to the biggest swing of the week. Paramount buying Warner Bros. Discovery for $170 billion.
We need a full segment for that one.
We absolutely do. The big one. Okay, so $170 billion. I need a second with that number.
Take your time.
Paramount Skydance just swallowed Warner Bros. Discovery whole. This is not a deal. This is a geological event.
And the part that keeps nagging at me. Netflix walked away. Quietly. No drama. No counter. Just gone.
Which tells you something.
It tells me Netflix ran the numbers and decided $170 billion for a debt-laden legacy media giant wasn't the move. And honestly, hard to argue with that math.
Or, hear me out. Netflix is playing a completely different game and doesn't need the content library because they're building with AI and original production. They don't need HBO's back catalog.
That's generous to Netflix.
I know, I sound like a pitch deck right now.
You really do. But look, the $6 billion in synergy projections. That's the number I keep circling back to. 3 years, $6 billion. Do you know what synergies means in a media merger?
Jobs, it means jobs.
Thousands of them. Industry insiders are already saying mass layoffs are basically baked in, despite what management is telling cameras. The press release says operational efficiencies. The footnote says people are getting cut.
And that's the human cost that gets lost when you're talking about a number with 12 zeros.
11 zeros.
See, this is why I need you.
The strategic logic here, though, I actually think it's real. You've got Paramount's distribution muscle, Skydance's production credibility, and now the entire Warner Bros. IP vault, DC, HBO, CNN, the whole thing.
That's a content empire, like genuinely. You can argue about the price, but the asset base is extraordinary.
I will argue about the price. $170 billion is enormous for a company that's been bleeding subscribers and carrying serious debt. They better hit that synergy number.
They better hit it and then some.
And here's the wild coda to this whole story. Netflix, having just lost the biggest media deal of 2026, turns around and buys Ben Affleck's AI post-production startup in the same week.
I cannot stress enough how much I love that.
Losing a $170 billion empire and consoling yourself with a celebrity AI shop.
Treat yourself, Netflix. You've earned it.
Okay, while we're on the subject of enormous bets, Devon and Coterra just announced a $58 billion energy merger. And Nate has feelings.
I have so many feelings. Voices.
Okay, so analysts are saying overall deal volume is down 22% this year versus last. But the value of megadeals, anything over $1 billion, has more than doubled. Which means what exactly?
Means boardrooms stopped grazing and started hunting big game.
That's one way to put it.
I'm serious, though. When credit's tight and uncertainty's high, you don't do 30 small deals. You do one enormous bet and hope you're right.
The risk concentration on that strategy is terrifying.
Absolutely terrifying. Beautifully terrifying.
Moving on before you propose to a balance sheet again. On Paramount Warner, the commentary is cautiously optimistic about the $6 billion synergy target, but people are flagging the human cost. Big layoffs coming. Management is publicly saying all the right things. Obviously.
Obviously, they always do.
And I actually pushed back on this with a listener who emailed us. They said $6 billion in cost synergies over 3 years is totally achievable. And I said, sure, if you mean headcount.
That's almost entirely what they mean.
Right? Where else does $6 billion come from in a media merger? You're not finding efficiency in the content budget. You're finding it in people.
To be fair, there's real estate, overlapping tech stacks, duplicate distribution deals.
Nate,
Yeah, okay, it's mostly people.
the AI infrastructure angle is interesting too. Analysts are calling it the single biggest strategic driver in deal-making right now, with healthcare drug discovery platforms right behind it, which tracks with everything we've been seeing.
It tracks with Ben Affleck selling his AI post-production startup to Netflix in the same week Netflix lost a $170 billion media empire.
Wait, that actually happened.
That actually happened.
I need a minute.
Take your time.
Okay, we'll get into the Warner deal properly right after this. Spill the tea.
Okay, can we just take a moment to appreciate the week Ben Affleck is having?
Please, yes, go.
The man sells his AI post-production startup directly to Netflix, the same Netflix that just got outbid on a $170 billion media empire days earlier.
Netflix loses Warner Brothers Discovery to Paramount and goes, fine, we'll take Ben Affleck's thing.
Consolation prize, that's what $170 billion in heartbreak buys you. A celebrity AA shop.
I actually want to know what this startup does though. Like, is it legitimately useful? Or is it vibes and a famous name?
Does it matter? Netflix needed a win. Affleck needed an exit. Los Angeles needed a story.
That's not an answer, Nate.
It's Hollywood, Maya. There are no answers.
Fair. Okay, but the Denso Room story is the one I actually think people are sleeping on.
Totally different energy. Quiet Japanese auto parts giant creeps up on a chip maker, and analysts just did not see it coming.
Denso is massive. This isn't some exploratory chat over sushi. If this goes formal, you've got auto supply chain money colliding with semiconductor strategy in one move.
And it's the kind of deal that makes sense the second you hear it, and then you wonder why nobody tried it sooner.
That's my favorite category of deal.
Mine too, honestly. Okay, we should flag this one for tomorrow because if Denso makes it official, chip stocks and auto stocks move simultaneously.
2 sectors, 1 announcement. We'll be watching.
Speaking of things worth watching, Devon and Coterra, 58 billion US energy. That one's next, and it is not small. Tomorrow's radar. Okay, tomorrow, Denso and Rome. That's the one I'm watching most closely.
Same. Because if Denso makes this official, you're looking at auto parts and semiconductors moving in tandem. That's a weird market day.
2 sectors reacting simultaneously. Analysts are going to lose their minds.
Also on the radar, Diana Shipping's raised bid for Genco. $23.50 a share. Genco's board has to respond soon.
I think they push back. Counteroffer is coming.
You think? I'm not so sure Genco has the leverage they think they do.
They always think they have leverage.
They never have leverage.
Never. And keep an eye on Hudbay Minerals. Copper consolidation is quietly heating up alongside all these mega deals.
Speaking of which, volume down 22%, but mega deal value more than doubled. Boardrooms aren't playing small ball anymore.
Go big or go home, which actually brings us perfectly to the deal that started this whole conversation today.